This tool is known as cost volume profit analysis, and we will understand with the help of few examples as to how this tool of cost volume profit analysis helps us in taking decisions. So basically, what cost volume profit analysis, what does it tell us? It basically tells us that there is a direct relationship between the selling price, between the variable cost and the fixed cost and the unit sold. So which means these four components, the selling price per unit, variable cost per unit, fixed cost, which is the total, which is the fixed cost, is the cost that is that happens, and it has got nothing to do with the volume of activity, and the number of units sold. So these four components put together impact our profitability, and this is known as cost volume profit analysis. This is known as cost volume profit analysis. Now, before I move forward, if I give you a small case, and if I tell you that a company is having a capacity to produce 10,000 units of a product, a company is having a capacity to produce 10,000 units of a product. The selling price per unit, let's say, is 100 rupees, and the variable cost, let's say, is 40 rupees, and this company has a fixed cost which is, let's say, 1 lakh. Now if I ask you to tell me as to what will be the break-even point of this company, that means how many units this company has to produce so as to reach to a point where it is neither making profit nor it is making losses. So what will be your answer? How would you figure it out? Or to keep it simple, you can take the variable cost to be as 50. So your capacity is 10,000 and your selling price per unit is 100 rupees, and the variable cost is 50 rupees. There's a fixed cost of 1 lakh rupees. So what will be the break-even point? How much this company has to produce and sell so that this company is able to achieve a break-even point? Should not take you more than 1.5 minutes.
So what is the FC?
Fixed
Value?
cost. Fixed cost.
No, value.
Fixed cost is 1 lakh.
1 lakh.
Yeah, 1 lakh.
6,000 unit.
6,000 unit. Okay. Let's see what everyone. And you are taking the variable cost. How much?
50.
50. Okay. Very good. Very good. And you are saying the break-even point is 6,000.
Yeah.
Okay.
5 lakh plus 1 lakh.
5 lakh, 6 lakh.
6 lakh, and the selling price is 100. So 6,000 into 100. 6 lakh.
So break-even point is 6,000 units.
Yeah.
So you mean to say if this company produces 6,000 units, it will neither incur a loss nor earn any profit.
Yeah.
Okay. Let's see what others have to say.